So it's Wisdom Jordan right back here, and in this lesson we are going to be looking at the ATR indicator, or it is known as the average true range. So the average true range, or the ATR, is a market volatility indicator, and on this channel we shall mainly use this indicator to determine our take profits, our stop loss, and our trading stop loss levels. So oftentimes you place your stop loss and take profit orders in wrong positions due to lack of knowledge about the ATR indicator. Right. So we are going to jump onto a live chart, and then we shall be looking at the ATR indicator practically. Right. So when you look on a chart on your screen right now, you can look and see that we are having Euro USD. Okay. Yeah. We are having Euro USD on a daily time frame right here. So every candle you see right on this chart represents one day. Okay. So what we do, we are going to place in our ATR indicator, and then we see how to use this indicator. Okay. So when you look at the chart, there is this icon here, or there is an icon of insert. So you can use that one, or you can use right here. Okay. So you can click on insert, and then you go to indicators, then you go to there is here trend indicators, there is oscillators. That's where you can find the average true range indicator right here. Or you can simply click on this panel for indicators, and then you go to oscillators, then you find the average true range. So when you click on the average true range, it brings a pop-up box. Okay, and then on this pop-up box we have parameters, we have these parameters, we have levels, and then we have the visualization. Okay, those and they don't matter so much, right? So when look at parameters, we are putting in the period. The period, of course, we looked at it in a video about moving averages. So period is measuring how many candles backward should I calculate, and then give you the figure. So here we are using a period of 14 because that is a basic figure here. Okay, for the ATR, it's a default setting. We shall leave it in default setting of 14. And then here you can set a color, which is not necessary as much. You can put any color you want, but you want the figure. Okay, so we can leave it at blue, which is okay. And then here you have the size of the line that the ATR is going to be showing you, etc. Then you have here levels. That one, you don't need it. We just need the zero level. And then we also need this zero level measures our when the ATR is above zero, it's a positive ATR, and then below is negative ATR, stuff like that, but it doesn't matter so much. Then we have the visualization. It will be set to all time frames. Okay, so if the settings are done, of course, at the settings, you click on OK. Okay, so when you click on OK, you get a pop-up window right down here, and then this window is what is showing us what ATR is doing. Okay, so but what we need is this digit here, what it is reading. It is reading 0.0088. Okay, it is reading 0.0088, and then we shall be calculating those 88 pips. Okay, because here on the side of the prices, when you look here, okay, okay, so what we are saying is that on the price side, we're having five decimal places, but normally we take 4 decimal places, and that's why the ATR is reading 0088. Okay, so this 88 as a digit here, 088. So 88 is the ATR reading. So 88 becomes the pips. Okay, it is 88 pips or 88 points. All right. So when you look at the ATR right here, it is 88, and it changes depending on the candle. So the average true range, it measures the it will be measuring for us the ATR of the current candle. Okay, so I want you to note that this is the ATR of this current candle, this one here. So the ATR of this current candle is 88. All right, let me hope we are together. The ATR of this current candle is 88 because our reading is 88. That is 0.0088. And then the reason as why we are taking 88 is because the ATR is rounded, is given to 4 decimal places, but here we are having 05, 2. Okay, let us look at, okay, 0.5. Sorry. The price is, for example, 1.5506. So, for example, the price is 1.5580, then a 9. Okay. So we have the price reading at 5 decimal places, but we eliminated this last digit because it is a fractional pip and it does not matter. So that's why you're taking a reading of 4 decimal places from the ATR. Okay. So the ATR reading here is 88 pips. So in case you want to see the ATR of the previous candles, what you simply do is you place Control D on your, that is Control plus D, get the data window. Okay. That is Control plus D. And then you can see that every time we move these digits here, move also here, right there. Okay. So you can see that every time we move the mouse or the cursor, we can get the precise right here. Every time we move it like this, the prices also change. Okay. So the ATR reading of this candle here today is 0. That is the 88. We are taking the last 2 digits as the ATR reading. Okay. And then we look at this candle, its ATR was 82. And then we look at this previous candle here, the one which is having a line right now, it is reading as 136, that is 136 pips. Okay. So this candle here had 127 pips. This candle here had 127 pips. And then this candle here had 130 pips. So the ATR simply measures for us So the ATR simply measures for us how many pips the candle has run within a single day. So this candle so far has run 88 pips. Okay. So that's why we measure from this candle so far has run an average. The average ATR, the average ATR of the previous 14 candles is 88. It keeps on changing. So yeah, we are having 88. Okay. So when we are going to place our orders, for example, we want to place a take profit, or we want to place, so this is the, if you want to see the ATR of the previous candles, you simply place Control D to get the data window, okay, on your chart, and then you'll be able to get the ATR. So the ATR is the average true range, and then we set it to 14, and then 14 means that it will be counting for us 14 candles. Okay, if you have a period of 14, it will be giving us a digit, which is the range between, like the average range of 14 candles. The average of these 14 candles, they have moved a number of, that is 88 pips, okay, on average. So if we add the ATR of this candle plus other 14, sorry, if we add the ATR of 14 candles backward, we shall be able to get this digit here, which is 88 pips. Okay, so that is how we read the ATR in short. Okay, so after knowing your ATR, what's the purpose? Number one. So say that purpose number one is to place sorry, is to place our take profit, then to also place our take, sorry, our stop loss. Then shall also look at the trailing stop loss. Trailing stop loss. Okay. So we are going to be looking at these three, how to use the ATR for these three characters. Okay. Should be looking at this, how to place our take profits, then I'll take our stop losses, and then our trailing stop losses. Okay. So we shall start with the stop loss. Okay. We shall start with the stop loss. So in general, okay, so if you want to make a trade, for example, you want to make a buy trade, okay, we only buy when the price is low, and then we sell when the price is high. Okay, So when you see an uptrend, for example, this is a clear uptrend right here. That's a clear uptrend. So we are saying that the price moves high, goes low, it moves high. Oh, sorry. We're saying that the price goes high, price goes low, price goes high, price goes low, goes high, retraces, then here, and then there. Okay. So we buy when the price has made a retracement in most cases. So it depends on the entry. That one we have not looked at it yet, but I want to show you where we place our stop losses and then where we place our take profits. Okay. So in general, I know if you're new, if you're not new to forex trading, this is what you've been doing. You have been looking at this candle. For example, you made a buy order from this candle. Okay. You made a buy order from this candle right here, this candle here. If you made your buy order from that candle, what happens is that you normally put your stop losses. You normally put your stop losses below the swing low of that candle right here. That is what they tell you to do. Stop loss. This is a buy signal. Okay. So you are normally told to, if you're buying from this candle, you normally put here your buy order. Then you put here your stop loss. And maybe you calculate the distance here as 2. Then you put your take profit. Okay. That is what you normally do in most cases. But that is not the idea. Okay. That is not the idea. That is not the idea. Okay. So when you are going to place your, for example, this is the candle from which you're going to buy from, this candle here. Okay. And then you want to say that I'm buying from this level here, this price. And then you want to put your stop loss here. Okay. This is the buy. And then you want to put here your stop loss. So you normally calculate this one as 1. Then you normally calculate your take profit as 2. Yeah. You normally calculate it as 2. Trace your stop loss. Okay. I agree with it, but it does not work. It doesn't work in forex trading. So it will not help you that much because in most cases you are going to buy and then you're going to hit out. For example, if you bought from this candle here, then you put a stop loss here, what would happen? Of course, the price goes into the money and then finally, boom, it hits your stop loss and then you're out. Okay, so that one we shall not do it. So in most cases, you've been told that if you're buying from here, then, sorry, if you're buying from here and then you put here your take profit. Okay, from here, put, this is the buy, you put here your profit, and then here your stop loss. Hey, like that. Then you put there your stop loss. That is what you've been told before. Okay, so they tell you that the distance from your buying price to your stop loss is already supposed to be a 1, for example. And then here, the distance from your buy to your take profit is supposed to be at least twice. So for example, if your stop loss is 20 pips, 20 pips away from your buy price, it means that you have to put a target of 40 pips so that you make much more than you lose in case you lose. Or when you win much more than what you lose in short. Okay. So this normally doesn't work because sometimes the price hits your take profit and then it keeps going up. It keeps going high, 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 high. It does not work like that. Okay. So we say that the price is in a clear uptrend. If you put a buy order here, we put a stop loss in order this for when the price goes in a side that we do not want it to go, we do not lose too much, and then we put our take profit. So the ATR we shall be using it to calculate the distance where to put our stop losses and then our take profits. So we shall start with the stop loss. Number 1, how do we place our stop losses? So we say that, for example, we are going to buy from this candle here. So for example, we are buying from this point here. So for example, we are placing our buy order from there. We can put our stop loss here. How do we determine that price of where to put our stop losses? Okay, this is what we do. This is what we do. We shall come at the ATR. Okay, here. And we say that our ATR was 88. So if the ATR is 88, of course, what we are going to do is to multiply this digit by 1.5. Then this one will give us, that's 132. Like that. So your stop loss is supposed to be 132 pips below your buy price. That is how you place your stop loss. So in case you want to target 1 to 2, you make sure that this is times 2, and then you get 264. That will be your take profit. Okay. So once again, so what we're going to do is that we shall do this live. Let us try to place this order live, for example. So for example, look at this current candle here. It is a bullish candle. So in case you want to make a buy order, you can on your screen you place F9 to place orders. For example, F9. So when you place there, you get this pop-up window. This pop-up window is for how to enter your trades. It will show you your type of order. It will show you the volume, that's the lot size. It will show you the pair you are going to trade. It will show you the sell by market, or these are the market prices. It will show you the bid and the asks. This is the bid and this is the ask price. Okay, so when you look right down here, you can put a pending order. So it can be a buy stop order. For example, if we want to buy when the price reaches this level, okay, right there. So what we shall do is that we shall place a buy stop order. Okay, if we want to buy from this price, we shall place a buy stop order at 6612. Okay, this is going to be buy stop because the price is still below. And then at a price of, say it round here, it is 6557. Okay, at 6557. Okay, this is 6557. Okay, yes. Oh, too bad the market is closed at this time. Okay, market is closed. I'm making this video at a time when the market is already closed. I didn't know, so sorry for that. So what we're saying is that if you want to buy from this level here, okay, and then want to determine where to put our stop loss. Our stop loss, in most cases, you've been told to put it below the swing low of the candle you're buying from. But what I'm saying is that you come to the ATR reading and you read the ATR, it is reading 88. So for here, you have to multiply the ATR by 1.5 so that you place your stop loss at least 1.5 of the average true range of the previous 14 candles. Okay, so you place the stop loss at least 1.5. You can place it at 2 of the ATR, that is 2 times the ATR reading, but at least it should be at least 1.5 of the ATR. So this distance here is a stop loss. Okay, so this stop loss here is going to be equivalent to 1.5 multiplied by the ATR value. Okay, simple as that. That is how your stop loss is going to be placed in every trade you make. Simple as that. So for take profit, you can take it at twice, but in most cases for take profits, we place it using what we call the sorry. We like the ratios. You can use 1 to 2, but it does not make sense. I'll teach you how to place your stop loss, how to use the exit indicators and how to make profits. How to take profits using the exit indicators. So right now, we shall go to MetaTrader 5 because the market is closed, and then I find out where we can place a live order using MetaTrader 5. Okay. So for example, when you look at this chart right here, we want to find out the ATR value here. It is 161.6 pips. Okay. Here the ATR reading is 161.6 pips. The ATR is already placed, okay? So the ATR reading here is 161.6 pips right there. So we shall take this value times 2 and then we get our stop loss. So for example, when you look at the chart, if you want to buy from this candle, you can say that I'm going to place my buy here. I'm going to put my buy order there. And then I put my stop loss. And then I also determine my take profit. So for example, for the stop loss, we said it's going to be 1.5 of the ATR. So that's going to be 1.5 of 161.6. That's 1.5 times 161. That is 1.5 times 161. You get 241 pips. Okay. So when you pick your crosshair, okay, when you pick your crosshair from here, it can determine those pips. That is 241. It will be showing us. I don't know if you're seeing those readings where there is a word point. So it is reading 241.5. So that is 241. 24, 24, around there. That's where our stop loss is going to be at 1046.02. Do not mind these pairs. These are derived synthetic indices, okay? So that's where our stop loss is going to be if we measure it at 1.5 of the ATR. Right? So once again, you'll come, if you want to place an order, you say it at F9. You click F9 to place an order. Then you can place a pending order. Okay. Then you go to buy stop if you want to buy. Then you put the price. So for example, we said if we want to buy from this price right here, that is 1048.31. We say 1048.31. That's a buy stop order. Then you place at place. So our order is right in. Okay. Our order is right in at this level here. So we want to determine our stop loss. What do? You go to the ATR reading. That is number one. You go to the ATR reading right there. So at the ATR reading, what you're going to do is that you multiply the ATR by 1.5. That is 161.6 times 1.5. You get 241 around there. Okay. So when you place, if you want to place your stop loss, it will be 241 points below this buy order. So when you click on it, double click, move the crosshair down. You double click, you put a crosshair, sorry, Control F is a crosshair. And then when you double click and then drop, okay, make sure you do it at once. Double click, drop, so that you get the values. Okay, Control F. This is where we are willing to buy from. Double click, drop. After double clicking and drop, and then you'll get the points moving. I think you can see those digits moving. So we have to measure down 241 points. That's the 1.5 of the ATR. 240. Okay, 42 is okay. That's 242. Do not mind the last digit. That is 242.6. That is not 2426. It is 242.6. So they do not put the 0.6 on the crosshair. So it is 242. Okay, 0.6. So that's where our stop loss is going to be. Stop loss is going to be at 45.88. Okay. So double click on the order to modify. Double click the order to modify a stop loss. We say the stop loss is going to be at 240, around 242. Okay. Right here. 242. Okay. 242. That's okay. 45. Right there. That is 45.88. Okay. 5, then 88. Click on modify. So this is our stop loss level. Okay, so the stop loss is 1.5 of the ATR below the buy price. Okay, this is where you're buying from. Okay, and then our stop loss is right here. Okay, so it is 1.5 of the ATR. So we are saying the formula is simple. Okay, that the stop loss is equivalent to 1.5. Sorry, that is 1.5 then times the ATR, times the ATR. So this ATR value is always here. Is an ATR reading. Okay, that's how we use the ATR indicator. Then, if you want to put your stop loss, sorry, that is for stop loss. If you want to put a take profit, so for take profit, for example, someone can say, and I'm going to take the take profit at the next level of resistance. Okay, for example, here, someone can say, I'm going to take my take profit. I'm going to place my take profit as price of the ATR. If you do that, of course, that is going to be 161 times 2. That is 322 points, of course. Okay. So that is 322 points. So we said you get a crosshair. There you come right on this order, 322 points. Okay. You can put your first take profits at around there. Okay. That is 2 times of the ATR. Okay. So in most cases, it is always so difficult for this stop loss to be hit. And then for the take profit, it's going to be twice of the ATR. So take profit, you can simply place around the 9 here and then modify it. So the profit is going to be around here. If you're using resistance and support, or if you're using the ATR, it is going to be 2 times of the ATR and it will be around there. Okay. So you can see that your total maximum risk when you are risking $2.43 to make 4.15. That is not bad. Make 4.15. Okay, that is how we place our stop losses and then our take profits. Okay, so once again, we are saying that when you want to place, we are saying that stop loss, we are saying that stop loss equals to 1.5 times the ATR value. Okay, then you can say that take profit can simply be equivalent to 2 or 3 times, probably 3 of the ATR. That is 3 times the ATR value. Okay, it is normally good, 3 times the ATR value. And then if you want to place your trailing stop loss, okay, that is the last part I'm going to talk about. Okay, so we are saying that if you want to place your trailing stop loss, for example, we look at this trade, if the candle breaks and then tries to reach this level, but you want to put a trailing stop loss, say that trailing stop is put on orders whereby it is in the money. Okay, and if it is in the money and then you want to limit and make sure that you do not lose your profits, okay, you normally place your trailing stop loss at least one of the ATR below the current prices. Okay, you place the ATR 1.5 below the current prices. So once again, in brief, okay, so in brief, to conclude how to place a stop losses and then how to use the ATR indicator. So we said we shall use it for mainly 3 purposes, and then we shall be stopping from there. So those are the main 3 purposes. We say that purpose number 1, we shall be using it to, number 1 is to place our stop loss, and we say that we are saying that the stop loss is supposed to be at least 1.5 of the ATR reading, and then the ATR reading is always displayed right here when you drop in your ATR. When you drop in your ATR indicator, it's right there. This is 162.4. Okay, so here the ATR, the take profit is at least 3 times the ATR and more, and then you assume that the trailing stop loss is at least one of the ATR. Okay, so that is it. So for example, now we are going to place an order. Okay, and we shall assume that the price goes into the money, and then when it goes into the money, then we shall be able to place our trailing stop loss. Okay, so for example, look at the chart here. Once again, we shall use this same chart we have been using in the example. we want to put our buy stop order right here, and then we shall put our stop loss below it, and then we shall put our take profit order. Okay, so this is a conclusion. Pay attention so that you don't miss out. Okay, so those are the three prices we are going to be determining. Okay, so you place F9 to get the menu for buying, or sorry, for trading. So F9, you get this order panel. So you go to type of the market you want to place. You want to place a pending order. So this order will be filed if the price reaches that level. Okay, this is going to be a buy stop order. If you don't remember these orders, please go back and watch a video about these orders. It's a buy stop order. Okay, so when you place a buy stop order at a price which is above the current market, okay, so for example here it is 48.24. It's going to be at 48.24. Okay, 48.24. Then you place the order, okay, right here. So we want to know where to put our stop loss after placing this order. So you come to the ATR, it is reading 162. So 162 times 2, you'll get something like 240 and 42 or 43 there. So you have to do to get those points below this buy order. Okay, so when you drop down to put your stop loss, it's going to be at around 245. Okay, 240, 242, 245, around here. This is 246. This will be at least 1.5 of the ATR below the current below the current price. Okay, so in case the order gets triggered and does not go way into your way, this is where your stop loss should be. Okay, around there. This is going to be at 1045. Yes, 1045.20. Okay, this is 1045. Okay, it's okay. And modify it from here around there. So this is where our stop loss is going to be, and then our take profit will be at least 3 of the ATR. So 3 times 162, you get 486 pips. Okay, or 486 points. So you come, sorry, so let's 486 points. So when you drag, you'll be able to see that this is, you'll be seeing the points increase. This is 486 points, 485, around here. This is where our take profit is going to be. Okay, so we shall place our take profit right there. This is 2, right, modify and then modify it again. This is where our take profit is going to be, around here. Okay, so we are risking here. So when you look at the chart, what we have done is that we have placed a buy order here. We have placed the ATR right here, and that is 1.5 of the ATR. Then we have placed our stop loss, we have put our buy order right here. That's a buy stop order in case the price is right below here today. So if the price moves higher and higher and hits and triggers us, there's a chance of it falling downwards and then we lose, but we shall not lose too much. Okay, so in case the price triggers us again, once again, the price can come and trigger you, then it drops right back below, and then it comes back. It will not reach our stop loss, and then it will come back into our take profit. Okay, so that might also happen. But if that doesn't happen, let me zoom in a bit so that you can be able to see clearly. Okay, so what I'm saying is that we have made our buy order from here. This is where our stop loss is, and this is our take profit. So in most cases, you can see a trader place at a trade around here and then put their stop loss around here. So what happens is that after the price reaches, it retraces down a bitward, triggers their stop loss, and then they're out, and then the price reverses into the direction they desired. So in most cases, that's why we use the 1.5 of the ATR, so that even if the price comes and triggers us from here, Price comes, it triggers us, and then it tries to retrace. Okay, it is far difficult for it to come and reach this level. Okay, in most cases it will reach at most around one of the ATR. Okay, that's why we use 1.5 and more. So and then it will go backward into the direction that we want it to go. Okay, so this is our buy, so this is our stop loss, and then this is our take profit. So the take profit is at least, this is three times the ATR, and then this one is at least 2 times of the ATR. Okay, so as simple as that. Sorry, this is 1.5 of the ATR, not 2. Okay, so this is at least, this is 3, and then this one is at least 1.5, like that. So that's how we place our trailing stop losses, and then our stop loss and then take profit. So in case the price triggers us, retraces to not reach our stop loss, and then it can then revert once again. Okay, so once again, so there is a chance that the price will come direct before it reaches our stop, before it reaches our take profit level. It can still come back and then you make a loss. So but what we do is that when the price goes into the money, but before reaching our take profit target, it might drop back, which is absurd, and then it will trigger, and we get a losing trade. But what we do is that we can put what we call a trailing stop loss. Okay, so a trailing stop loss, we normally count that if for example the price is here currently. Okay, so for example the price comes, and this is our current price right here. So what we do is that we measure 1.5, we measure one of the ATR, that's 162 points, and then we put it below. That is going to be our trailing stop loss. So this trailing stop loss, we normally put the stop loss at least one ATR below the current price. Okay, delete. So for example, if we bought from here, and then we put our stop loss, and then we are here, we want to put a trailing stop loss. So you come at this current market price right here, and then you measure one ATR, and then you put your stop loss. You shift your stop loss away from here, and then it comes at least one ATR below there. So in case the price tries to revert backwards for you to make a losing trade, you do not, and then you lock in some profits. Thank you so much for watching this video. In case you did not understand anything, please be free to comment, and I'll be able to make everything clear for you. So that is how we use the ATR indicator. Thank you so much for watching. My name is Jordan. Bye bye.